Greetings to Miss Beatrice. My name is Cellsty Jailis and my metric number is BB21110293. Now I'm gonna explain for the question A, whereas how we calculate this question is based on the value given. So for the first ratio is current ratio, whereas the formula is current asset divided with current liabilities. So 63,125 divide with 34,375 and we got the answer 1.84 for 2015. For 2016, we do the same step and we got the answer 0.9. Next, acid test ratio, where the formula is current asset minus with inventory divide with current liabilities. So, for 2015, 63,125 minus with 36,250 divide with 34,375 and we got the answer 0.78. Same goes to 2016 and we got the answer 0.24. And the third one is average collection period, where the formula is account receivable divided with daily credit sales times with 365 days. So for 2015, 15,625 divided with 187,500 times with 365. So we got the answer 30.42, and for 2016 do the same steps. So we got the answer 18.98. And the fourth one is inventory turnover, where the formula is cost of goods sold divided with inventory. Whereas for 2015, 112,500 divided with 36,250. So we got the answer 3.10. And same goes to 2016 and we got the answer 4.06. Next is debt ratio, where the formula is total liabilities divided with total asset. So for 2015, 70,313 divided with 140,625 and we got the answer 0.5. And same goes to 2016, we got the answer 0.61. And the next one is times interest earned, where the formula is net operating income divided with interest expense. So 2016, 18,000 divided with 5,719 and we got the answer 3.15. And for 2016, we got the answer 4.67. For the operating profit margin, the formula is operating profit divided with sales and times with 100. So for 2015, 6,141 divided with 100, 87,500 times with 100 and we got 3.28%. And same goes to 2016, we got 4.18%. And for the total asset turnover, the formula is sales divided with total asset. So for 2015, 187,500 divided with 140,625 and we got the answer 1.33, and for the 2016 we got the answer 2.05. For the fixed asset turnover, the formula is sales divided with fixed asset. So for 2015, 187,500 divided with 77,500. So we got the answer 2.42. And for 2016, we got the answer for 3.50. For the second last ratio is operating return on asset, where the formula is net income divided with total asset and times with 100. So for 2015, 6,141 divided with 140,625 times 100. So we got the answer 4.37, And for 2016, we got the answer at 0.57%. And the last one is return on equity, where the formula is net income divided with common equity times with 100. So 2015, 6,141 divide with 70,313 times with 100, and we got the answer at 0.73%. And for 2016, we got the answer 22.13%. Now let's move on to the question B, where the question is about we need to know the financial position at the end of 2015 and compared with the industry average. So for the first, liquidity ratio is current ratio. At the end of 2015, it is 1.84. Compared with the industry average, it is 2.0. So it is worse since a higher ratio means greater firm liquidity. And the next one is acid test ratio, whereas the 2015, it is 0.78. Compared with industry average, it is 0.8. So it is worse and better if compared with industry average, so it is similar. Next, it is average collection period, whereas for 2015, it is 30.42 days. Compared with industry average, it is 37 days. So it is better since the lower the number, the shorter the time it takes for firm to collect its credit sales. And the fourth one is inventory turnover, whereas for 2015, it is 3.10. Compared with industry average, it is 2.5. So, it is better since the higher the turnover, the lower the firm's investment in inventory. Move on to the capital structure. For debt ratio in 2015, it is 0.50%. Compared with industry average, it is 0.58%. So, it is better since a higher ratio indicates a greater reliance on non-owner financing of financial leverage. And for the times interest earned in 2015, it is 3.15. Compared to industry average, it is 3.80. So, it is worse since a higher ratio indicates that the firm's ability to pay its interest in a timely manner is greater. And the next one is asset management efficiency. For total asset turnover in 2015, it is 3.28%. Meanwhile, in average industry is 10.0%. So, it is better since a higher ratio means the firm is more efficient using its assets to generate sales. And the next one is fixed asset turnover. For 2015, it is 1.33. Meanwhile, for industry average, it is 1.14. So, it is better since a higher ratio means the firm is using its fixed asset more efficient. And the last one is profitability, whereas operating profit margin for 2015, it is 2.42. Meanwhile, for industry average, it is 1.40. So, it is worse and better if compared with 10% of industry average, so it is similar. And the next one is operating return on asset, whereas for 2015, it is 4.37%, and compared with industry average, it is 11.40%. So, it is better since the higher the number, the greater the return earned. And last but not least, for the return on equity, for 2015, it is 8.73%, and industry average is 10.50%.
For question C, what were the firm's earnings per share? The formula that we use is net income divided with number of shares outstanding equal to 16,703,000 divided with 5,000 equal to 3.34. For the price earning ratio, the formula is stock price per share divided with earnings per share equal to 15 divided with 3.34 equal to 4.49. For the market to book ratio, the formula is market price per share divided with book value per share equal to market price per share divided with common shareholder equity or common share outstanding equal to 50 divided with 465,000 divided with 5,000 equal to 15 divided with 15.09 equal to 0.99. In conclusion, the firm had an earnings per share of $3.34, a price earning ratio of 1.5 and a market to book ratio of 0.99 at the end of 2016. This ratio provides insight into the valuation of the firm and can be used by investors to make investment decisions. For question D, the answer is the current ratio and asset test ratio of the company is less. The current ratio of the firm in 2016 is 0.9 and the asset test ratio is 0.24. This leisure ratio means that the firm less liquid than the industry. The operating profit margin of the firm in 2016 is 4.18% and the operating return on asset is 8.57%. This tells us that firm is not really efficient in generating operating profit at that time. Next, the firm's return on equity in 2016 is 22.13%. Thus, firm is providing more profit to the shareholder. For question B, liquidity ratio shows firm still able to pay its short-term liabilities. Capital structure debt ratio is better, means ratio can be used to analyze the long-term solvency of a firm. Asset management efficiency for total asset turnover and fixed asset turnover of firm both is better. This indicates that firm is efficient, use its total asset and utilize fixed asset. For profitability, the operating profit margin is similar, means firm still in a good management. The operating return on asset is better, while return on equity is worse, means firms not profitable invest in the firm. That's all from us. Thank you.